Thank you so much for joining us. My name's Tally, and today I have the pleasure of being joined by Brian Mosoff, who is the CEO of Ether Capital. Brian, how are you doing today?
Doing great. Always happy to chat crypto and all things going on in this space. Thanks for having me.
Yeah, looking forward to chatting. So today we're going to largely focus on Ethereum, which is the second largest cryptocurrency with a market value of approximately $350 billion. But before we get into things, why don't you tell us a bit about your background and provide a brief overview of Ether Capital? When was the firm founded? When did it go public? And what is it that you guys specialize in exactly?
So I fell into the crypto space about a decade ago. I first heard of Bitcoin in 2012. Really started doing meaningful research in 2013. Thought it was really interesting. There seemed to be something really exciting happening on Reddit and people talking about distributed computing science and monetary policy, and could there be digitally native currencies that were more native to the internet than US dollars moving through PayPal. And so I started a journey of basically just doing a lot of research, trying to talk to anyone that I knew who was following the story as well, which at the time was almost no one. Everyone thought I was insane and crazy. And then I started going to the Toronto meetup groups. I'm based in Toronto. And then about a year later, Vitalik and the proposal for Ethereum comes about. And I thought that that was really interesting because at that point in time, there were a lot of people who were cloning Bitcoin, but not really making meaningful improvements to the protocol. And Ethereum was really this special new blockchain that had this idea of a smart contract platform and that everything could get tokenized. So I spent a few years really researching Ethereum and looking at what kind of applications could get built on top of that. I helped a friend build a business that would facilitate loans to margin traders on a specific exchange. And then around this point in time, you have the 2017 ICO boom, and this is people who are issuing tokens on Ethereum, kind of one of the first Main Street applications that you saw. And the price of Ether at this point is going from $100 up to, I guess, 1,200 by the end of 2017, and Bitcoin is going from 3,000 up to 20,000. So really an exciting time. It was a bull run where a lot of retail investors started paying attention to the asset class. And there was no good access point in the capital markets to follow a group of people who were crypto natives or from traditional finance who really understood what was happening in this ecosystem. And so Ether Capital was formed really in kind of late 2017, early 2018 to be that access point in the capital markets. I wasn't involved in it yet, but the company was exactly this. It was putting together crypto natives and traditional finance executives and venture capitalists, and to focus on specifically Ethereum. Not that we don't like Bitcoin or think that there's a lot of value in Bitcoin. We just thought that there's something really special about this idea of a smart contract platform. And so we went live in early 2018. I joined the company by the summer, and we made a number of investments into key pieces of infrastructure. We helped form the world's first Bitcoin and Ethereum ETFs alongside Purpose Investments. We are the first, I think, in the capital markets to stake a meaningful amount of Ether. And so we're always at the forefront of what infrastructure is going to be and to make us the access point in the capital markets for people who want exposure to that ecosystem. Of course, it's been a rocky ride. There was a bear market from, I guess, the beginning of 2018 until the, I guess, second half of 2020. But we've been big believers in the space and are excited by all the different verticals: DeFi, NFTs, metaverse, stablecoins. So anything to do with crypto, I'm a part of and excited by and interested in what those developments may be.
Thank you so much. That was a great overview. I love that you have an early perspective of having really watched the space grow into what it is now today. So back to Ether Capital, you guys have a product agreement with Purpose Investments, and in 2021 you launched the Purpose Ether ETF. Why don't you tell us a bit about this product and what other products have you launched with Purpose?
So we created two ETFs basically within a month or two of one another. And at that point in time, there were closed funds in the market, meaning there wasn't daily liquidity. So sometimes you might be buying or selling above or below the spot price of the asset. And so for people who just want directional exposure to Bitcoin or to Ether, and, ETFs are very efficient vehicles for people who don't want to take possession of the asset. They don't want to hold the Bitcoin on their own. They don't want to hold the Ether by themselves and deal with hardware wallets or a software-based wallet on a laptop. An ETF can be bought through their brokerage account, and it qualifies for an RSP or a TFSA. So those are great products, and it allows another group of investors who traditionally didn't have access points. So we were the first in the world to launch a Bitcoin ETF and an Ether ETF. Even in the US today, even though they have ETFs, they're not based on the spot price. You're not actually buying Bitcoin when you buy a US Bitcoin ETF. They're based on futures contracts. So it's possible that there's slippage in the price. So those are very efficient products. We have those two products launched with purpose. And we're looking at other things that we can, bring to the market to just create more access points and price exposure to everything that's happening in the crypto space. But certainly the premier or the flagship products are those two ETFs, the Bitcoin and the Ether ETFs.
Great. Yeah, thanks so much. That's really interesting. So, why don't we take a step back and start with the basics? Could you explain to our audience what is Ether in relation to Ethereum and how is Ether different from Bitcoin?
So Bitcoin was the first digital asset or cryptocurrency. It goes live January 3, 2009. And at the base layer at Bitcoin, at its core, at the protocol level, you can't really do very much with it. It doesn't have a lot of functionality, and that was by design. So I like to think of Bitcoin as kind of this calculator that has a plus and a minus button. It's super secure. I can send, one Bitcoin from Brian to Tally. I mean, if I sent you one Bitcoin, that would be a pretty nice gift, I would say. But I can't actually ask the protocol to do anything beyond that. I can't say, can you send this Bitcoin from my account to Tally's, next week or in a day from now? And Ethereum said, well, this is really interesting, this idea of a blockchain, a distributed ledger, some piece of software running some type of monetary policy. But what happens if you make it more flexible, if you make it more programmable? And so Ethereum is what we refer to as a smart contract platform. And you could think of it as an operating system. So it's iOS for your iPhone. And what that allows is for developers to build all sorts of applications and tools that plug into some common infrastructure. So I like to think of Bitcoin as a global clearinghouse for one asset, Bitcoin, and Ethereum as a global settlement layer for any asset or any type of activity. And whether that activity is Brian sending one Ether or one ETH from Brian to Tally, or I'm playing around in decentralized finance and I want to trade between two different assets, but not on a centralized exchange using the protocol itself, I can do that. I can move a tokenized US dollar around. I can purchase an NFT. So there's all sorts of really exciting activities and verticals that have emerged around Ethereum that don't exist on Bitcoin. Again, it doesn't mean that Bitcoin doesn't have its place. I just think that there's a lot of exciting things that Ethereum is going to allow developers and a global community who are creative, who are interested in finance, to build and be a part of. And that's why we decided to set up a company specifically focused on Ethereum.
Amazing. Yeah, and that's definitely an important distinction for sure. So, there's currently a lot of buzz surrounding what's known as the merge, which is an upcoming milestone for Ethereum, where the system will go from a proof of work concept to a proof of stake. And in doing so, the blockchain will become much more energy efficient. So, what exactly does this mean for Ethereum, and how do you think it will affect the price of Ether?
So right now, Ethereum uses proof of work as a method of validation. So you could think of all of these networks need someone to take all of the transactions and include them into blocks, into pages of the ledger. Bitcoin uses proof of work mining, which is people spending electricity and computing hardware. Ethereum also uses proof of work mining currently, electricity and computing hardware to validate transactions and receive the new token reward. But Ethereum is in transition to a new network referred to as Ethereum 2.0, ETH 2.0. You'll see it, abbreviated a whole bunch of different ways. But the idea is to turn off the proof of work mining and replace it, instead of computing hardware and electricity being part of the validation. Now you can lock up your native token, Ether, into effectively a bond with the protocol and take turns validating transactions. So what that does is it means that Brian, in Toronto, who pays 12.5 cents a kilowatt hour, I'm not going to mine Bitcoin or Ether. I just can't compete with people who have, near free electricity. But I can, on proof of stake my asset. I can take my Ether, I can hit a specific button, or I can use an exchange to do it, and I can start generating a reward, part of the yield, I guess, on top of my holdings. And what the merge is the moment in time where the proof of work network turns off, the proof of stake network is what's now validating Ethereum. It comes together, and now everyone is able to stake their Ether. It's really bullish for the price of Ether and a really big opportunity for traditional investors, I think, because if they can take possession of any of these assets where they believe over the next 2 years or 5 years, these technologies are going to be more integrated in everyday society, and they're long the price of Ether, and they can get a 5% yield on top of their holdings, I mean, that's a pretty important thing. It also is the transition of these unproductive commodities and turning them into yield generating instruments. So that's what the merge is all about. I think a lot of people are waking up to how big of an opportunity this is as an investor, whether you're part of the crypto community or you're an institutional investor. That 5% yield, and it's going to fluctuate based on a number of different factors, 5 to 15% yields on a technology that has potential for real exponential growth is not something that you can ignore. So I'm very bullish on this event. That said, there's a huge risk in the transition from proof of work to proof of stake. Something certainly could go wrong technically, and so I caution people to just assume that it will work perfectly. I think that it will be pulled off without any glitches, but these are big moments in time in crypto, and certainly high risk moments to watch these transitions take place. We've never seen a network transition from proof of work to proof of stake, and we've certainly never seen one that was a $350 billion protocol. So there's a lot at risk here.
Right, fascinating. And what do you think would motivate an institutional investor to hop into the space at this point in time?
I think any investor, institution, retail who's trying to time the market, it's way too volatile. It's been volatile since I showed up in 2012, 2013. It was volatile in 2011. It was volatile in 2013. It's going to remain volatile well into the future. And so I'm always trying to help investors frame the question around is, instead of thinking is now a good time, I ask, in 5 years from now, in 10 years from now, do you believe that there's more global adoption? Do you believe that there's going to be more or better infrastructure from institutions? Do you think that there's going to be more access points into the space? Do you think as a society, people are going to be more comfortable with digitally native assets versus central bank issued dollars? If you think the answer is yes, and you kind of look at some other technologies or industries that have been disrupted by software, I like to point out that Uber disrupts the taxi industry, Airbnb disrupts the hotel industry, and now we have software disrupting central banking policy. If you think that all those things are true and likely to continue to be true in the next 5 or 10 years, then don't get so bogged down into the price of today and build a position. And whether that is a small piece of a portfolio or it's a dollar cost average, over a 12-month period, that's okay too. Finding the correct access point for yourself is something to consider. Is it a structured product? Is it holding the asset direct? Everyone's portfolio and desires are unique to them, and so there's no one size fits all. And so again, this all comes back to various access points.
Yeah, great. Thank you so much. So I would love to get some of your views on the current market. Ether is now down 35% from its all-time high, and Bitcoin is down approximately 40% from its all-time high. So in your opinion, do you think this is the beginning of a larger pullback, or is it a buying opportunity?
Again, I don't think you can really point to a specific moment in time. I don't get bogged down into price. I'm mostly focused on infrastructure and developers. Do I see more capital formation happening in the industry, more venture capitalists raising funds to help build infrastructure? Do I see intellectual capital leaving traditional finance and entering the space? There's better custody, better wallets. And as long as there's more people rallying around the space, I think that can give you comfort that the space is here to stay and going to be bigger somewhere down the road. And again, whether that's 6 months, 12 months, 2 years, I don't know. I certainly think that there's big risks, still in the space. We don't have clarity yet from government and regulators on how they're going to appropriately regulate or have oversight of the asset class or the centralized exchanges, the access points. And so depending on what they do, we could see more uncertainty and a pullback in price. But again, if your time preference is low, I think that this is a really exciting technology and a really exciting space to build a sliver of portfolio of exposure to.
Yeah, agreed completely. So Ether has a market value of $350 billion with Bitcoin's at 800 billion. Do you ever see Ether's market value surpassing Bitcoin's at any point in time?
This is really hard to say. I mean, my answer to this would be probably. I don't know that that means anything positive or negative for Bitcoin or positive or negative for Ethereum. I do think that the value propositions are pretty different. Bitcoin's value proposition right now is really centered around this digital gold, 21 million hard cap, store of value. That's the narrative to Bitcoin. And Ethereum is trying to capture all of this economic activity globally onto one platform, one clearinghouse. And whether that's crypto native activity or that's traditional finance or real world asset activity, people tokenizing loans, people tokenizing real estate, people tokenizing their car to try and borrow against it. And some of those things may be far away, but that activity is going to take place on Ethereum, not on Bitcoin. So in my view, long term, the value proposition of capturing all of this global economic activity far surpasses something that's competing with the above ground gold valuation of, I don't know if it's $8 or $10 trillion now. But that to me is really exciting and why I'm so bullish on Ethereum. When I look at websites like cryptofees.info, and I encourage everyone who's watching this video to just bookmark this page, check it out every day. It shows you the daily transaction fees being paid to use any of these networks. Now, you may not know what the activity is or scratch your head and go, wow, $40 million today paid to the Ethereum protocol. What the heck are people doing? What I like about this website is it doesn't matter. All that matters is that people consistently are using these networks. The same that you can say, do I know what all of the internet traffic is or what the daily internet activity was specifically focused on? No, but I know that there's a ton of usage using that infrastructure and those pipes, and that there's a way to access financially exposure to the usage of that protocol. And in Ethereum, that would just be, buying Ether and having some price exposure to all of that activity. So I check this website constantly, every day, every few days, just to see what's happening, to see how it compares to other competing protocols. And it's also a really good way when people are thinking about other assets in the space, other smart contract platforms. They're reading a CNBC article or a Business Insider article that something could be an Ether killer or the next Bitcoin. This is a great website that just benchmarks how much are people using any of these protocols. And this doesn't mean, by the way, we're talking a lot about Ethereum, and I run Ether Capital, but it doesn't mean necessarily that Ethereum is going to be the winner. I think it is currently, but this is a good website to keep checking the pulse on what's happening in the industry, and is something else coming up behind it? Are people starting to move their activity to one of these other networks? So it's a great resource for a lot of potential investors and current investors holding various assets in the space.
Yeah, thanks for that. I'll definitely have to check it out. So earlier on, we mentioned how there are some obvious risks in investing in the market, but could you describe some of those primary risks investing in Ethereum or other cryptocurrencies in general?
Certainly the biggest risk I think right now are kind of two things that keep me up at night. One is what regulation is going to look like over the next 6 to 24 months. I think we haven't had the pressure on governments and regulators up until the last year or so. The space retracted after that 2017 bull run, and so it wasn't at the top of mind for most governments and regulators to figure out how they were going to treat the asset class. The run up into a $2 trillion asset class certainly puts it on their radar. People issuing stable coins. Stable coins are tokenized dollars. They could be tokenized euros, but most of the dollars that exist on these blockchains are some flavor of USD. And it has regulators wondering who can issue those tokenized US dollars. Are they backed one-to-one in terms of reserves? I don't know. Should it be done through some type of algorithm? So there's a lot of questions that are pressuring regulators, as now there's hundreds of billions of dollars that exist on these blockchains in some flavor of USD. In Canada recently, we had the Freedom Convoy and a lot of attention paid to dollars that were being donated to that group through cryptocurrencies, through Bitcoin mostly. There could have been some Ether as well. And that woke up a lot of regulators wondering, what does anti-money laundering and terrorist financing look like in this space? And how are we going to monitor that activity? And then I also think as central banks are fighting the narrative around inflation, countries are going to feel their sovereignty be threatened by this asset class. So we saw China a year ago try and ban Bitcoin. How successful they'll be, I don't know. There's probably still going to be underground activity, but they can push away access points and ways for people to ramp off those Bitcoin back into local currencies. How successful it will be, I don't know, but certainly governments around the world are trying to figure out what to do with this asset class. That's one concern. The other big risk, I think, is some black swan event, a large custodian being hacked, um, a bug in the code of one of these protocols that can be exploited somehow. Just because it hasn't happened yet doesn't mean it can't happen in the future. Certainly, the Ethereum upgrade from ETH1 to ETH2 and the merge event is a big risk. You know, it's a big technical upgrade. There's a lot of moving parts. It's never been tried before. There'll be, of course, lots of battle testing on test nets, but it's one thing to do it on a test net, another thing to do it, you know, IRL in real life. So those are kind of the two things that I think about a lot. In terms of price volatility, I'm not really concerned because I'm not looking to momentum trade these assets. I caution a lot of investors not to try and treat this asset class as something to momentum trade. Don't FOMO into the newest dog coin of the month. Take a step back, do research on the fundamentals of why Bitcoin exists, what its value proposition is, why Ethereum exists, what its value proposition is, why those two assets are kind of the blue chips and the two biggest by market cap. And from there, you could decide, do I want additional volatility, additional asymmetry on other assets outside of just those top two by market cap?
Definitely, yeah. And it'll be really interesting to see how that landscape plays out in the next couple of years. But I guess that's what makes the space so exciting and why everyone's so fascinated by it. So, Brian, as we wrap up, what can investors expect in terms of news flow from Ether Capital and or Ethereum in the next coming months?
For us, we're really focused on staking currently. We're the first, as I mentioned, in the world to stake a significant amount of Ether. It's currently 20,000 Ether, generating a 5% yield. We'd love to stake 100% of our assets. We are, of course, cautious around the merge event and not going 100% in just yet. But that's really attractive to a company that, different than the ETFs, we have a corporate structure. And that was by design because we wanted to do more than just provide price exposure to the asset. We wanted to have a flexible structure to allow us to stake. I don't think we're going to see closed funds or ETFs be able to stake their Ether and generate revenue or yield anytime soon, but we're able to do that. And for us, it's really interesting to be able to use those revenues to do all sorts of different things. We could decide to pay it out in a dividend. We could use that to finance building infrastructure in the space. We'll have some news in the coming months on what we plan to do with those revenues. But it's a really exciting time, I think, for the space as a whole. And in general, I think everyone is excited by the asset class, despite it being complex and having its own lexicon and being a little head scratchy to new people because it moves a mile a minute. I think what we're seeing is globally people waking up to the potential of the asset class and what that infrastructure may mean and how it's going to shape the next iteration of the web and finance, and whether they want to participate by way of price exposure to the assets or helping build infrastructure. This is really a very inclusive technology. This is not a top-down banking system trying to build new tools type of structure. This is a bottom-up community self-composed global movement of people saying we can piggyback off each other's infrastructure to build very efficient settlement layers and assets that can interact with one another in a very open and expressive way. And that's what excites me about the space, is seeing how many people around the world are starting to recognize that there's so much potential for where this is going to go. We're really just getting started. And that's not to say that, you know, the price is going to skyrocket tomorrow. But again, in the 5 or 10 or 20 year time horizon, what happens to the space? I can only imagine very good things.
Yeah, amazing. Well, thank you so much, Brian. That was truly fascinating conversation. I know I learned a lot and I hope that our viewers did too. So thank you again for joining us and hope you have a good day.
Thanks, everyone, and hope to be back soon.